Alright, for this video I want to go over a sample Georgia Form 500, which is an individual income tax return. Now this form can be filed for both residents, non-residents, and part-year residents of Georgia. In this example, we're going to be looking at a taxpayer here who is a full-time resident of Georgia. So we've got the GA Form 500 here, which we'll go through, and we've also got our taxpayer's federal Form 1040. And you're going to need this in front of you before you get started on the state return, because Georgia, like a lot of states, they use your federal AGI as the starting point. So we'll go through both of these returns. We also have the Georgia form instructions here, and we'll need these to reference the tax tables to figure out how much tax we're going to owe on our Georgia income. And then lastly, I've got one slide here just covering some background on the fact pattern example that we're going to be working with, and then also just some basic Georgia full-time resident tax notes that we'll need to be mindful of as we're going through the return. So we'll start with the fact pattern here, and then we'll get into the filings. So our taxpayer here, Adam taxpayer, he is a single filing taxpayer, so unmarried, and a full-time resident of Atlanta. He works as a consultant, and his W-2 salary for the year, box 1, wages on his W-2 is $97,000. He also made a $3,000 pre-tax 401k contribution, and so that's also reported on his return, his W-2. And the W-2 shows that Georgia wages of $97,000, and he had Georgia state income taxes withheld of $55.78. Now for investment income, he's got a bank account here that paid interest income of $100. He also has a brokerage account that paid him some qualified dividends during the year, and he sold some stocks, so he had some short-term capital losses, long-term capital gains. And then he's also invested in a Florida municipal bond, which paid him interest income of $409. And Adam is also invested in some U.S. treasuries, and that paid him interest of $75. Now he's also covered by health insurance at work, and it is a high deductible plan, so he opened a HSA, a health savings account, and he put $1,000 into that account. Now, as far as living, he rents an apartment, so he's not going to have any itemized deductions, really. So it's better for Adam to claim the standard deduction, and he'll do so both for federal and state purposes. Now, just some notes on things that we need to keep in mind for this return. So Georgia follows the federal treatment for contributions to your HSA and those 401k contributions. So in other words, the deduction that Adam will get on the federal return for his HSA, Georgia will respect that. There's no adjustment required, and that's worth noting because some states don't allow that, right? So California, for example, makes you add back those HSA contributions, and the 401k contributions, Georgia will also allow that as a pre-tax deduction. In contrast, if you look at a state like Pennsylvania, they require an add back for 401k contributions. You can't deduct them. All right, now the municipal interest. This is really important. A lot of states do this, where the municipal bond interest is going to be exempt from federal income taxes, so the federal government can't tax it, but it could be taxable in your state of residence. So Georgia, if you have municipal bond interest from within the state, it's not going to tax that at the state level, but if you have interest earned from non-Georgia states or municipalities, Georgia will tax it. And that's what we're going to see with Adam here with his Florida municipal bond interest. We're going to need an adjustment for that, $409. Now, for the capital gains and dividends, the qualified dividends, everything is just taxed as ordinary income. There's no preferential rates for qualified dividend income or long-term capital gains. And as far as Georgia deductions here, as a resident single filer, he's going to get that standard deduction of $5,400, and he gets one personal exemption of $2,700. All right, so let's have a look at the return here. Well, start with the 1040, go through this kind of quickly just so we can get on to the Georgia 500. But you can see here, we're on page 1. We've got the wages, $97,000 up there, and the investment income down here. So there's the $409 of tax-exempt municipal interest, so not taxed at the federal level. And we see the taxable amount of interest and then the dividend income. We've got Adam's net amount of capital gains and losses. So That's on Schedule D here. So he did a Schedule D to report the short-term capital losses, long-term capital gains. And so the net amount is reported up here on line 7. And then we also see on line 10 the $1,000 HSA deduction. So he completed the 8889 for the health savings account, and he was able to deduct the $1,000 on his federal tax return. All right, so very quick run through on the federal. Now let's have a look at the Georgia return. So again, this is Georgia Form 500 individual income tax return. Adam is a county year taxpayer, so year beginning January 1 through the end of the year, December 31st. They do like that you input your driver's license information. So if Adam has a Georgia driver's license, GA is the state that issued it, and then the driver's license ID number. First name, last name, and the social security number for the taxpayer, and then the taxpayer's address. Now, line 4, what is your residency status with the state? Well, Adam is a full year resident, so we've indicated number 1 for full year resident and residency status. Filing status on number 5, so he's single filer, so he's put an A here on line 5. And then the number of exemptions. So you get one exemption for yourself. If your spouse, if you're married, you finally joint return, the spouse will get one. And then you get one for your dependents. In this case, Adam just has one, right? Page 2 is where you would input that information on your dependents if you have any. So name, first name, last name, social security number, and the relationship to the filer. Now, okay, so now we're actually into the numbers here. We got, again, remember the Georgia, like a lot of states, uses your federal AGI as a starting point. So line 8, we have our federal adjusted gross income. So if we take a look back at our 1040 here on line 11, we have the AGI of $96,359. And so that is what we have started with here on line 8, $96,359. Now we're getting into the adjustments. So the adjustments, Form 500, Schedule 1, that's where you would enter any kind of federal to state adjustments that are required to conform with Georgia state law. So if we jump down to the adjustments section, so Georgia Form 500, Schedule 1 is the adjustments to income. So you have any kind of additions here or subtractions from income. So the first addition we have, line 1, is that interest income on non-Georgia municipal and state bonds. So there's the $409, right? So that is a addition to our Georgia income because federal government can't tax it, but Georgia can under these circumstances. So $409 increased income. And then the subtraction from income is the interest income on the treasury. So line 10, interest on U.S. obligations. So there's the $75. So $75 of treasuries is taxable at the federal level, but the states cannot tax it. So that's why we have a subtraction to our federal AGI for the $75 there. All right, and then once we have the net amount, so the net amount is that increase in $334, right? So an increase by the Florida municipal interest, a decrease of $75 by the treasury interest, and so the net amount is an increase to income of $334. So we've got our Georgia AGI here on line 10, $96,693. Adam gets one standard deduction there, right? Single unmarried filer, $5,400. And then the total itemized deductions, right? Remember, we're not taking any itemized deductions. We just had the standard deduction, so those line items are blank. And so the ending figure here on line 13, $91,293, right? So the Georgia AGI minus the standard deduction is $91,293. Then as far as personal exemptions, right, enter the number from line 6C. He's only got one, and you multiply it by $2,700 if your filing status is either A or D. His filing status is A, right? He's a single filing taxpayer. So $2,700 times 1 is going to be a $2,700 exemption. So now $91,293 minus the $2,700 leaves us with line 15A of $88,593. And so that is our Georgia taxable income. So now once we have our Georgia taxable income, we need to figure out how much tax are we going to owe. So now we go back to the instructions and look at the rate table. So if we jump down to the tax tables, So we have here the Georgia tax rate schedules, and we can see here for filing status, right, single filing status, if Georgia taxable income is over $7,000, which it is, the tax that we're going to owe is $230 plus 5.75%. All right. Okay, so what we'll do here is we'll go back to the return. What do we owe? So we've got $88,593. So we'll do $88,593 times, sorry, I'm going to subtract by 7,000, right, because it's the excess. So we'll do this times 0.0575, 4,691 plus 230, right? So there's our number, 4921.5. So round up, 4922, $4,922 is going to be the tax that we owe based on that income. And that is the amount of the total balance owed, right? So if you have any kind of credits available to reduce the amount of tax that you owe, you can certainly claim them here. But in this case, Adam doesn't have any credits. So we've just got total balance is $4,922. And this is the amount of tax that he actually owes on that income, right? We haven't factored in the withholding yet to see whether he owes more or he's getting a refund. In this section here, they do ask that we input the information on our W-2s. So we've got the W-2 here issued from the employer's federal ID number, state withholding ID number, and then lines 4 and 5 are really important, right? The amount of Georgia wages as reported on your W-2 and the amount of Georgia income tax withheld. So $5,578 was the amount of tax that was withheld. So now, line 23, we've got the total GA withholding. All right, so these are the total amount of prepayments that were made, right? That's the taxes that were taken out of his paycheck. And so now we look at, well, is there an overpayment or a balance due? In this case, if line 27 exceeds line 22, so 5578 exceeds line 22, 4922, so there's an overpayment, right? He had too much tax withheld from his paycheck, so he's getting a tax refund of $656. All right, now on lines 30 and on down here, you can elect to just have that credited, so rolled forward to next year's estimated payments if you want, or you can certainly donate it to one of these charitable groups that they've listed on the return directly. In this case, Adam is just going to have the whole amount refunded to him, and so he's reported that down here on line 44. So $656 is the amount of refund that he's going to get, and he's going to have this mailed to him. If you want it paid via direct deposit, you can input the bank details down here, right? So routing number, account number, and then the type of account that it is, so checking or savings. All right, so that covers it for this tutorial. I hope that was helpful. If you have any questions, please leave me a comment below, and I look forward to seeing you again on the next video. Thank you.